Not sure where everyone is calling in from. It is a lovely, drizzly, rainy day here in Denver, which only makes me so excited for what might potentially be happening up in the mountains. I heard that the mountains started making snow yesterday, which is cool.
Yeah, it's like a 5-star sunny Colorado day. So
Perfect. Perfect.
Cool. I think, Tony, we could probably jump in.
Okay, great. Let me go ahead and start sharing my screen and we can get going here. Perfect. And I'm just going to go ahead and play this from the start. And I think everyone should be able to see my screen now. It looks like we already have a hand raised. So let me just see what's going on. Sorry about the Broncos. Appreciate that. It was definitely quite the prime time show, as all of my friends like to remind me that the Broncos should not be playing in any prime time spot based on their performance last night. So we appreciate that up front, and let's dive on in. So thank you all for taking the time to meet with us today. Today, we are really looking forward to kind of just doing a Payments 101, more of an educational series, a look at the payment space, where it's been, where it's going, the players involved, and things like that. I am Tony Kuzner. I am a solutions consultant here, part of the sales enablement team at Infinicept. Started as a customer success manager with Infinicept about 3 years ago. So I had the pleasure of working with a lot of our clients as they took on, the payment facilitator model or a new embedded payments model that they weren't as used to before. And Savannah, I'll let you introduce yourself if you'd like.
Yeah, Savannah Krieg, Director of Strategic Markets, employee number 4 or 5, depending who you ask. Started off at Infinicept as the chief of staff and have worn a lot of different hats since I've been here, but currently work with our bank and processing customers from a strategic perspective. So gives the perspective of both those people who are looking after these models and also the people who are considering adopting them. So looking forward to sharing this with you all.
Perfect. And before we dive in, just wanted to go over kind of the purpose of today's webinar and the agenda behind it. We really want to kind of dive into the payments ecosystem, its complexities, right? How it's been evolving over the last few years, and really who is involved in that ecosystem, right? Who are the players, or as we like to call it, the who's who of payments. And then, some key initiatives and some key things and responsibilities that we see necessary to succeed, right? It's important to understand the roles and the models out there. Every payments program might be different, the verticals and merchants that you're working with. And so it's really important to understand what's out there and what is the best fit for you. So we're going to kind of dive into that today. I will be checking the Slack as I go through. Slack, the Zoom chat box and the QA there. So if there are any questions, we'll definitely stick around for a couple minutes afterwards, but feel free to shout them out as we're going. I'll be sure to keep a tab on that. So with that being said, let's dive on in. So what's really cool, and I think we saw a lot of this recently, especially over the last couple of years, with the kind of crazy world that we were living in, we really saw a lot of growth in digital commerce, right? The e-commerce space, kind of seeing a transition from more of a brick and mortar physical commerce, which we actually see a little bit of a reduction. We're really seeing digital commerce grow, and we see it expecting to grow even more over the next couple of years. This really allows companies to add value to the services that they're already offering, and it provides the ability for these companies to handle their merchant experience, right? Be more in control of their merchant experience. Which ultimately, can lead to a happier merchant. Happier merchants will lead to more retention, more volume that you're ultimately processing through your payments program, and that's more potential revenue. So we see, especially in the digital space, that merchant experience is really a key factor in your payments program. And I think another really, really awesome thing to see is we're seeing a lot of this growth being driven by small and medium-sized businesses. Small and medium enterprises are making up 76% of the payments revenue growth. in the marketplace. We're seeing also, these small and medium enterprises are looking for the next solution, right? How can they add value to what they're already offering to their clients? How can they incorporate payments in a way that fits for them as well as their verticals they're working with? And what we're tending to see is, the traditional merchant acquirers who have been kind of following the same path for years, ISOs, they're not as well equipped to meet the evolving needs of SMEs in the digital payments world. Like I mentioned, we're really looking for, SMAs are really looking for partners that provide a scalable solution that allows them to embed payments into their already service offerings. And again, just add more value and have more control over that merchant experience. Now let's kind of dive into the who's of payments, right? Who is involved in a transaction? Who is involved in actually moving the money to and from your consumers into your bank account, right? And these are kind of the 5 major players that we see as kind of involved in that process, right? We have the card networks, who are really kind of the rule setters, right? They kind of create the rules and compliance that everyone must follow and adhere to in the payments ecosystem. And then we have, the banks, both the issuing and the acquiring banks. Issuing banks more working with the end user consumers, issuing credit cards, debit cards, allowing your customers, your end user consumers to actually have the ability to buy their goods and transact with the merchant itself. While we're seeing the acquiring banks, they're really more responsible for the funding of the merchants for the payment company. We'll dive into a little bit more details regarding acquiring banks and how they handle the liability of a merchant, and of the money that merchant's processing. And processing is a great kind of piggyback segue into the payment processor, who typically work hand in hand with banks, and they are kind of the middleman and the person involved, the entity involved in managing the transaction and the settlement of that data between the different banks involved, the issuing and acquiring. And then finally, this is more of a broader bucket, if you will, but we have the merchant acquirers and we have the embedded payment providers. Now, this is, like I said, kind of more of a wider bucket where we're seeing things like, aggregators and ISOs of kind of maybe the past or previous models interacting with marketplace and payment facilitators, who are supporting a more embedded digital model, looking towards a scalable future and things like that. And just to dive into each of those buckets a little bit more granular, I think it's important to note who are the key players, right? In terms of card networks, I think that we're probably all aware of the major card networks involved, but they really do provide a serious service and value to the transactional flow. Like I mentioned, the card networks are really in charge of establishing the operating rules and regulations, managing that compliance as well, and always looking to the future, right? We see the card networks always kind of being, a entity pushing for new products and services, new ways to incorporate payments into already service offerings, as well as providing the background infrastructure to actually manage the money flowing through the networks itself, having the capability to manage interchange, set rates, and things of that nature. The issuing banks, like we said, are more at the consumer level. They are going to be the ones that are issuing your card to a consumer, right? A debit or a credit card, allowing that consumer to conduct payments and transact with merchants. The issuing bank is also the one in charge of settling with the networks for these end user consumers, reimbursing card holders as well, if things like a chargeback happens, as well as receiving interchange fees from the acquiring bank during the actual funding process. Acquiring banks, again, kind of in the name, these acquiring banks are the sponsors for things such as processors, ISOs, and payment facilitators. They carry and manage all risk associated with their agents and customers. And they are very regulated financial institutions with a lot of financial backings, and are kind of in a position to offer sponsorship to potential payment facilitators and things of that nature because of that financial backing they have and how regulated they are. The processors, like I said, are really, really a key player in the world of payments. They provide the ability to kind of connect issuing and acquiring banks, providing the connectivity to the networks as well for things like authorization, clearing, and settlement. Ultimately, the payment processors are going to execute the agreements with acquiring banks and ISCOs to kind of lend a hand in that relationship and ensure everything is squared away prior to that relationship kind of kicking off. And they also offer security, right? They're dealing with a lot of sensitive information. So by using tokenization and other encryption type methods for security, they ensure that these connectivities, the money moving to and from issuing and acquiring to merchants through the networks, are secure at every step of the way. And finally, merchant acquirers and embedded payment providers. This is that kind of larger, more broader bucket that I was referring to on that first initial slide. And really what we see here are, they are connecting the merchants to the payment ecosystem, right? They're providing the embedded payment solution to allow merchants to conduct their daily business operations. We're also seeing the embedded payment providers being charged of signing up new merchants, signing up new ways to accept payments, performing underwriting, ensuring that the merchants that they're working with, that they're, we're tying to different processors and banks, are not fraudulent, that they're not tied to any risky activity or anything like that. Again, a wide net kind of falls into this merchant acquirer or embedded payment provider space or bucket, if you will. We see processors, ISOs, e-commerce marketplaces, as well as, payment facilitators really kind of fit the bill of, these embedded payment providers. And finally, it's important to note that if you were going to be a payment facilitator or an embedded payment provider, you must have an agreement with an acquiring bank. Could be an acquiring bank, but you must have an agreement because ultimately, that acquiring bank needs to know that you're going to conduct business appropriately and handle risk appropriately along the way. And before I pass it off to you, Savannah, is there anything you'd like to add on what we've covered so far, or looking pretty good?
No, I think this is an awesome setup. Thank you.
Perfect.
Cool. So one of the things that is becoming pretty evident is that people are moving away from the ISO model, merchant of record, and referral models, especially towards these more embedded payment solutions. The biggest thing that's coming from that is the merchant experience, right? Payments should be a checkbox. So when you go and fill out a merchant application with fill out an application, with a software provider who is going to do something else for you, do you want to have payments included in what you're buying from us? Yes, please. Here's your rate. Great. Off to the races. So just allowing people to avoid that pivot into a Stripe or a Square or being tossed over the fence to a WorldPay or a Card Connect really makes things a lot smoother from a merchant perspective. I think people are most familiar with the ISO model. So Tony, if you want to keep going. And the ISO model is interesting because per the card brands, there's actually just ISO. Retail and wholesale are different types of the ISO model that have sort of been constructed by the different processors and different providers to limit what different people can do within the model that they have. So wholesale ISOs have a lot more agency. They're taking on a lot more of the merchant process. And unless they are a software enabled ISO, you think about like Rectangle Health, who was a retail ISO for a long time, or I'm coming up short on another example, but they have a software play embedded as well. And so that is sort of the edge case where we're going to start seeing those people especially switch to being payment facilitators. But by and large, right, ISOs are just payments companies, and it's sort of that pivot out of the ISV's unified experience. The referral model is another one, and I think we're going to see ISOs for a little longer. Do you mind going to the referral side, Tony? I think we're going to see ISOs for a little longer than we see referrals stick around, just because the switch from ISO is a different move, right? So when we think about referral models, that really is, hey, thanks for signing up for our software. Please meet, Mercury Payments. Please meet Card Connect, and they'll set you up with payment processing. So it's a very jarring departure from the ISV's experience and into this other experience. And the clear value prop for people who are in a referral model to switch to a more modern embedded payments experience, be that PF Lite or operating as a full payment facilitator, is that they get to offer that sort of payments as a checkbox opportunity that I was talking about, where they all stay within their systems and it's a very clean and simple way for merchants to operate. You think about Shopify, for example, on Stripe, and how when you use Shopify, you just add your payments in Shopify. And they don't operate as a payment facilitator today since they work with Stripe as their sponsor, but they're still giving that, again, unified merchant experience. The last bit here is the traditional payments ecosystem. Oh, you can go on, Tony, sorry. And in that ecosystem, right, there's just 3 parties involved. So merchant, acquiring bank and processor, and card banks. And when you transition to the embedded payments ecosystem, you add the embedded payments provider in there. And they are not only providing, and I know I'm repeating myself, but I think it's so important. They are not only providing the experience of field services software or restaurant point of sale or inventory management. They're also adding payments to those things. And they sit in the flow between the merchant and the acquiring bank and the processor, but everything else kind of goes the same. And if we have any sponsors or processors on the call, you remain a critical part of that ecosystem. And by deciding to do this, right, you're following the trends and you're giving the market what it wants and enabling yourself to participate and take a share of the embedded payments opportunity, because you're still going to get BIPs on those transactions as the sponsor. So the new models that we're seeing, I've mentioned a few of them. And I mentioned all these things too, but software companies have a lot of choices now. There are options that offer more control, and they increase their ownership of the overall payments process. Marketplaces are where, do I talk about marketplaces? Yes, I do. We have, so I won't talk about that now. We have marketplaces, we have PF Lites and managed hybrids. PF Lite is like, or managed hybrid, excuse me, is like Stripe Connect, where there's a shared risk model in place. Adyen also does a little bit of this. And then there's the full payment facilitator model, which I think people are more familiar with and has a lot of overlap with marketplace. So from a marketplace perspective, the marketplace is represented to the customer as the seller of the merchant goods. They conduct a single payment process and checkout process for multiple sellers. And they are required to sell merchant underwriting or perform merchant underwriting and risk monitoring. I would say that that's less clear in the card brand rules, but is what should occur because they are responsible for the risk. And they must ensure that their name or brand is displayed more prominently than the name or the brand of the other retailers and is part of the mobile application name or URL. So good examples of marketplaces, Uber, Amazon, right? When you buy something, go do something with Uber, you're never going to call your driver, Jim, and say, hey, Jim, this was terrible, and you didn't pick me up on time, right? You're contacting Uber. And so they fill the role of the marketplace in a situation like that. In the PF Lite and PF hybrid model, there are lots of options for no liability and still customizing the onboarding. So this is a big difference between PF Lite and referral, which is that the ISV who is providing the software product can make it look like they're providing the payments besides the merchant application, like they can, or the merchant agreement, excuse me, like they can say within their branded experience, do you want payments? Checkbox, yes, sure do. And then they can pass off the liability to the payment provider who's doing that. And that could be a PF Lite provider like Till, or that could be a PF Lite provider within a bigger entity who is more of a payments company. And Oh, can you go back, Tony? Sorry. Oh my goodness gracious. I just totally lost. Oh, sorry. Last thing I'll say about this is that obviously the liability shift is reflected in the economics. So in referral, right, you get 30 bips in, or you get, it increases across the model. So in referral, you get the least, in PF, you get the most, and in PF Lite, it's kind of in the middle because you're taking on some of those sales and support functions, but you're not necessarily taking on any or all of the liability because of how the model's set up. Okay, you can keep going. So in full PF, we see people take on all the control. And again, that's reflected in the economics. They manage the merchant application, and then they also manage the underwriting, onboarding, pricing, risk, and funding processes. They'll require a sponsor from an acquiring bank and a processor to enable the program. And they might be largely invisible to the consumer. So this is one of those big distinctions between PF and marketplace, is that when you're a payment facilitator, say a payment facilitator is using Workwave Workwave is the payment facilitator, and there's a merchant who's using them to manage their scheduling processes and also accept payments. Well, you're going to go to Paul's plumber for your dispute. You're not going to go to Workwave. And in the marketplace context, right, that would be different. You would go to the ISV. So that's sort of an important piece of this. And there's a lot of different ways to do this. MTLs come up a lot, and I think it could probably be its own whole session. But typically people are gravitating more and more towards that FBO type model, where funds are deposited in FBO and everything operates out of there, which helps avoid the MTL requirements that are part of the sort of fear, I think, that comes with going the route of full payback. Thank you. So we help people with this process. We help software companies become payment companies. We help payment companies scale and better serve software companies. And we help banks to sponsor and manage payment facilitators. We are not a payment facilitator ourselves. We are not a gateway. We work with multiple processors. And because of all those things and decisions we made a long time ago, we don't compete with the people that we serve. So we're really a payment operations platform for policies and procedures, and then all of the functions that I mentioned that you're required to perform. So the automated underwriting, instant onboarding, risk monitoring, and funding processes for your program. And I think oftentimes people are inclined to build this out themselves. It's something you need. There certainly are people who have built it, but the amount of time that those processes take and the distraction that it causes from doing what you do best are big reasons to go the route of partnering, along with the long game benefits of, we're constantly innovating. We're innovating for other partners. We're innovating for new partners. We are innovating for you if you ask us to, and we find a way to work on that together. And so it just allows you to have the best of the best on an ongoing basis by choosing to go with a subscription with InfiniSept rather than going the route of building this yourself, or if you're really big, acquiring a company. But I think opportunities for an acquisition are becoming fewer and far between, right? We saw GPG as a great example, just got snapped up by Bank of California. It'll be interesting to see what they do with that. And there's tons of other examples within the space of acquisitions. So this is our shameless promotion, but we have a great team. We've been doing this for a long time. We've helped tons and tons of companies do this all over the world. And we really believe in our product as a great way to both get started in this and also scale your business in the long run, and are happy to answer any questions and advise at whatever stage you're in your journey, whether that's, hey, which model's right for me, or further stages of, hey, what do I need to implement whatever model you've chosen? So we're glad to be a resource there and appreciate you all joining us today. Any questions?
Perfect. Well, thank you, Savannah, for bringing us through that. We'll stick around for a couple more minutes if there are any other additional questions. Here is a look of what is to come. If you'd like to learn a little bit more about compliance and how that plays a role in embedded payments, or kind of the risk that's involved and how to confidently manage that risk, feel free to stop by. We have a couple more come in, and I'm sure there'll be some more that we'll be promoting in the future then. So thanks, everyone. Hopefully this was helpful, and we'll stick around for any additional questions. Thanks, Bobby.